Welcome to Private Capital Insiders, a podcast brought to you by Private Capital Global. Today's guest is Tom Busby, Director of Life Science and Healthcare Investment Banking at Outcome Capital in Boston. Since joining Outcome in 2015, Tom has become a trusted advisor to leadership teams across Medtech, digital health, and life sciences services, helping them navigate complex transactions, strategic growth opportunities, and valuation optimization in an evolving healthcare landscape. Tom's deep transactional experience spans the full breadth of the life science verticals, including biopharma, diagnostics, and healthcare IT, bringing a strategy-driven approach to mergers and acquisitions, capital raising, and advisory services. Clients praise his authentic, relentless focus and market expertise, making him a uniquely valuable partner in driving innovation from bench to bedside. A recognized thought leader, Tom has been published in top industry journals such as Medtech Strategist, Life Science Leader, and The Pharma Letter. He also actively contributes as a board member of Health Tech Build, an influential Boston-based digital health innovation group, and serves on the external advisory board for the UMass Chan Medical School Bridge Fund. Before his investment banking career, Tom passionately dedicated himself to the public service and nonprofit sectors, raising significant capital for education-focused ventures while holding leadership roles. He also holds credentials as a FINRA registered securities rep with Series 79 and 63 licenses. Tom earned both his BS in philosophy and MBA from Suffolk University's Sawyer Business School on a full academic scholarship, where he served as president of the Business Association and led the university's alumni board for 2 terms. This showcased his deep commitment to community and giving back. So let's jump in with Tom Busby, because smart private capital moves start with insightful conversations. Hi, Tom. Good morning.
Hey, Frank. It's good to see you this morning. How you doing?
Great to have you on the show today. I'm doing well. Before we dive into the current medtech landscape, help our listeners understand a little bit about your background. I know you've got a really unique vantage point because you access both the investment banking and private equity sides of healthcare deals. So I'm curious, and I think our listeners would be really interested to hear what drew you to this focus, specifically medtech, and how that sort of dual perspective has shaped how you approach transactions today.
Thanks, Frank. So like many in the life sciences community, I was drawn in through a quasi-personal experience, actually a very personal experience. So I've been raising capital professionally for nearly 20 years. The last 10 years have been with Outcome Capital. We're a Boston-based life sciences dedicated strategic advisory and investment banking group. While I was in business school a little over a decade ago, my father fell ill, and I was by his bedside in a hospital for about 6 months, and it opened my eyes to the greatest travesty in the world being a life-saving technology, not getting to a patient only because of poor funding strategies and corporate strategy. From there, I've spent the last 10 years with Outcome advising on a series of merger and acquisition, private placement, debt and equity investments, different build-to-buy scenarios and partnerships. Within the medical device community as well, I think you have so many passionate engineers and physicians and PhDs who can really understand what the world is missing from a technology standpoint. But it's when you bring in, as you mentioned, the private equity community and broader investment community that you really need to wrap a great technology with a good business. That was what drew me in, is really understanding sort of how complex some of these medical device transactions can be and how exciting it can be to help patients.
Right. That's a great story. And I think all of us can relate to having some sort of personal experience that drives us in our career and what we care about. So from your vantage point, sorry.
Oh, no, I was just going to say, Frank, sometimes you'll meet students in business school or they're getting their PhDs and they say, what do you think of a career in life sciences? And it's certainly not for the faint of heart, that's for sure.
Agreed. So from your vantage point, what's been the biggest accelerator in the medtech deal making world over the past, year to 2 years? It's been obviously an interesting time to live in our economy, the geopolitical climate. All of this is really in a place where we really haven't seen it before. So are there any particular subsectors or transaction structures where you're actually seeing the most innovation?
I think, Frank, actually, if you look back, so, we're about 3/4 of the way through 2025 right now.
Yeah.
And I think coming into 2025 with a new administration, there was, a real hope for a cascade of deal making. both on the IPO front and private placements, venture capital, and private equity. That arguably hasn't materialized. And when you look at sort of the S&P as well over this year, only recently has it come back to where it was about 8 to 10 months ago. Now, some listeners may be thinking, well, what does this have to do with medtech, deal making, and private equity? But the fact of the matter is that many of these macroeconomic events have a real impact on middle market deal making. And between tariffs, interest rates, global war, and other unrest, I think that the investment community and the financial community has really been sitting on the sidelines. Now, curiously, it was, I think only a week or two ago, there was an article in the Wall Street Journal about a lot of bankers never getting to enjoy their summer homes in the Hamptons because their clients were starting to call and say, hey, we think that Q4 is going to be really exciting. And the fact of the matter is that I share that same passion. So number one, only recently have we seen the IPO window open for medtech companies, and it has. Up until recently, the only exit pathway has really been a strategic pathway. And so the table has really been tilted towards strategics on M&A. The private equity community recently, I'm a dedicated medtech banker. And what's interesting is I've never had so many calls from industrialist private equity investors saying, we own the manufacturing. And we've scaled to a point where we either go towards aerospace and defense or medical device manufacturing. And when we play out that investment thesis, we see ourselves owning a few branded product companies. And so I think that vertical integration is also causing a few new exit pathways for medical device companies that hadn't been thought of maybe a year and a half ago. And that's where, too, when you bring all this together, coming into the back half of 2025, looking into early 26, I think you see a lot of excitement from both buy and sell side right now. Mm-hmm. No deals are getting done unless both buyers and sellers agree. And I think now you see both sides coming together in an exciting way.
Yeah, interesting. So valuations in medtech have been a topic of debate. How are buyers and sellers, bridging the gap on pricing expectations, and what dynamics are driving the competitive intensity in these auctions right now?
Sellers tend to overvalue their assets and buyers tend to undervalue, and therein lies sort of the deal-making opportunity, where I think everyone is coming to the table a bit more sober and forward-looking is one, many venture-backed medical device companies need liquidity, and they can't hold on to these portfolio companies much longer without transacting. And so you start to ask questions of, I may not be getting the 10x return that I was hoping for. I may be looking at a 6, 7, 8x. But if my alternative is a 0, maybe I need to be a little bit more realistic. And for private equity, I tip my hat to private equity because they do find many groups to be very creative deal makers that can bake in future opportunity in terms of earnouts and other types of structures. Also, partial liquidity for some medtech companies, I think, offers some management teams the opportunity to exit and a new team to come in to carry the baton. And that's also the challenge here, Frank, is for a medical device company, as you start to really come into revenues, 5, 10, 15 million, you need a commercial leader that knows how to work the company through its next phase. And therein, too, is where I think these venture-backed medical device companies are saying, we understand that we might need a change management in addition to an exit here.
Yeah. Very good. Agreed on that. So medtech is often at the crossroads of regulatory compliance, clinical innovation, global supply chain challenges. How are these factors influencing the deal making today? And where do you see the biggest risks or opportunities for that matter for investors?
So rolling back to that theme of sorting vertical integration, and we're seeing a lot of CDMO activity in private equity right now in medtech. So, I believe that the life sciences industry is much more intertwined and entangled, particularly middle market investing, than some. So the biotech indices have been quite depressed over the last 2 years, and those life science investors need to place bets somewhere. And I think you start to see it coming in medtech right now. As medtech grows as an industry, the needs for service providers also start to grow in those types of vendors. What I'm seeing are a number of themes saying we're looking for contract design manufacturing organizations that support growing medtech companies, and we want to help them scale. Now, this is actually, Frank, a hangover from COVID. So it was in COVID that we found that our medical device supply chain was much more internationally oriented than we may like. And you saw companies, Medtronic, Boston Scientific, Abbott say, we need to reshore all of this. So now you have strategics in private equity competing for these same manufacturing firms. And that's where I think you've seen this escalation in multiples as well.
Gotcha. Yeah, that was an interesting experience and quite eye-opening for, I think, a lot of us. You would think it would be obvious that could be a potential problem, but here we are. So, from your perspective, what differentiates the firms that succeed in scaling in medtech, the medtech platforms post-acquisition? Are there common strategies you see working or pitfalls to avoid?
So the saying is 50% of all, destroys value. And I don't agree that the rate is that high, but where M&A does falter is certainly on the integration, Frank. And I think that that's more so found now with sales and marketing integrations than technology integrations. And so 10 years ago, if you brought a medical device company to an M&A market, strategics would first give the opportunity to R&D groups and engineers to evaluate the technology. Nowadays, when you give an opportunity to a strategic, the first group that evaluates it is sales and marketing executives. Does this fit, our patient, our client profile?
Right.
Does this align with how our reps, like to sell? And that's where I think on the integration is where for groups that have very smart sales and marketing organizations, they tend to have more hits than misses. For groups that over rely on technology assessments, they tend to have more misses than hits.
So as you look towards, I don't know, the next 2, 3, 4 years, what areas of medtech innovation do you expect to generate the most investor interest in M&A activity?
So, you can certainly follow your nose when it comes to what disease states are going to be prevalent and widespread and growing. So cardiac opportunities, abound. And you saw Edwards making a few significant plays, as well as Johnson and Johnson. Additionally, orthopedics has been in a bit of a depression, if you will, for a bit now, but there's a resurgence as you start to see integrated digital devices in orthopedic implants, especially. And so companies like Zimmer, for instance, I find very interesting because they're saying, we can expand our patient population and start doing knees, hips, and shoulders for patients in their 50s or younger to be able to preserve their motion and their active lifestyles, rather than thinking, it's only a severe geriatric patient getting a hip done. It's actually someone who's quite active and has another 10, 15 years of golf in them. And therein, actually, it's a matter of how do we make sure that the pre-op and the post-op is optimized. And that's where I think as well, you're seeing a new resurgence in investment in things like rehabilitation models and ensuring that patients are sort of following the protocols that physicians are recommending. Lastly here, not to go off on too much of a tangent, things like GLP-1s are affecting medtech because they're looking out and saying, what diseases may or may not exist if, we've kind of solved the weight problem. And so when we think of the relationship between overweight patients and orthopedics, there is a correlation. If we're dealing with a patient population whose weight is more aligned with a healthier lifestyle, are we going to see different sort of needs from the medical device community? And these are the things I think that more forward-looking investors are looking at.
As we get back to thinking about market positioning for sellers, tech companies preparing for that sales process, are there any steps that they can take the first 12 to 18 months before going to market?
The steps to take are all the things that aren't fun to do, Frank. And this is where, too, as a company gets ready for an institutional capital raise or an M&A transaction, your counterparties are typically able to assess the quality of your technology and your P&L quite quickly. The challenge then is on the back end diligence. And so this is where, I would highly encourage CEOs and management teams to consider, is your cap table clean? Are your operating documents aligned? Have you had your board meetings? Are all of those things the I's dotted and the T's crossed? Because when you enter diligence, you're dealing with a highly sophisticated counterparty that's evaluating you based off of, it's one thing to design a product and launch it. It's another thing to build a company. And we're here to buy a company. The other piece of this would be, you want to do your quality of earnings review. You want to do your financial review so that as counterparties start to engage, you don't need to revise numbers. Lastly, I think it's really management teams thinking more broadly about who are those groups that would most benefit from my technology in the future. Not only what is this value to me, but in the hands of someone else, what would they be able to unlock? And that's, I think, where you see the best value for deals and CEOs succeeding.
Yeah. It's actually interesting because as part of our practice in the Spark Group, Spark Partners, we provide fractional CFO services and interim services that way to try to help address some of those issues and prep that for investment bankers like yourself. We feel that that's a growing area, and certainly, your statement really supports that approach. In smaller companies, not every CFO knows how to build a cap table.
Eh,
Uh,
Frank, it's something that too, and this isn't to be critical of anyone, but as you're getting ready to sell, let's say you're doing 20 million in sales and you have a CFO who has never done an equity sale, never done a capital raise, never done an M&A. This is going to the World Series with someone that just you're putting a lot of of confidence in someone that it's not that they don't want to do it, it's that they haven't seen this ball game before. And that's where, too, I do suggest to CEOs, if you're calling them a CFO, be ready for that person to be evaluated as such. This may be uncomfortable for everybody. And so if they're really more of a VP of sales or a VP of finance or a bookkeeper or a controller, use those titles
right.
because otherwise use an outsourced group to be able to answer those questions and do that blocking and tackling.
Yeah, for sure. How do you see the talent piece playing out today?
On the investment side, investors invest in teams. You need to have the right product, you need to have the right company, but you're investing in the people to operate the business and to succeed. And so that is where CEOs and medtech, there is a need for charismatic leaders. There is a need for a CEO that can go out and hire a fantastic VP of sales and manage that person. There's a need for CEOs that can think strategically and through transactions and inorganic growth. And so this is also an issue where many very fantastic medtech CEOs have sales backgrounds.
Yeah.
But it's taking that VP sales hat off and putting the CEO hat on to say, actually, through inorganic acquisitions, I'm really going to grow this company in a parabolic fashion. If I'm just looking at selling product, it's going to be a linear improvement in value.
Yeah.
But when I think about buying companies and doing vertical integration and much more sophisticated deal making is when I've truly attained a CEO stature.
Are there any technologies or business models that you think are still underappreciated by the market?
In terms of technologies, there is a hangover still from COVID on diagnostics and monitoring technologies. And you've seen this sort of third path arise in medical devices where we had clinically validated medical devices that had gone through the FDA. Then we had sort of consumer devices, that you can go to CVS for. And now you have these quasi-clinically validated devices so this is a big story right now with the FDA and these sort of consumer regulated devices where they provide things like cardiac insight, oxygen intake insight, but it's not necessarily something that a hospital would rely on for data. I think that there is a big question mark of who owns that sector. Is it more consumer health or is it more clinically validated or is this truly a third area? And this is also where we see, again, interesting private equity theses coming together saying, similar to Roe and other direct-to-consumer pharmacies and online pharmacies, maybe in medical device, there's this sort of third path. And that's what's been interesting to see companies like Whoop build out their corporate development, business development office. It'll be interesting to see what businesses they acquire because they could be competing with Medtronic and Boston Scientific and Zimmer tomorrow, or they could stay in a sports medicine sort of consumer-related lane for years to come.
That's great. This is all good stuff, Tom. I wish we had a lot more time, so I'm going to try to move to a close and kind of put in a shameless plug for the Medtech conference we have coming up at Private Capital Global. I mean, you've been a real key part of this upcoming Medtech Capital Connect Dealmaker Summit that we're putting together for October. And without giving too much away, what conversations do you expect will be most important at this gathering, and why should private capital executives be paying close attention?
So what excites me here, Frank, about the Private Capital Global MedTech Conference is this. There is no middle market dedicated deal making conference for MedTech that exists today. And when you so I'm someone who's on the road constantly. I go to every MedTech conference that you can get to, large, medium, small, and other. And I think that the middle market community, those companies doing 10 million, 15, 20 million plus in revenue, enterprise values between 30 to 500 million. They're an underserved community. And so with this conference, I think it's going to be an opportunity for medical device CEOs to talk with growth stage investors and private equity investors. There's going to be an opportunity for founders and owners of CDMOs themselves and medtech consultancies and service providers to meet with growth stage medical device companies and for themselves to consider an opportunity to transact. And so what's special about this is I don't think you can find it elsewhere, Frank. And it's in my backyard in Boston.
There you go. Well, I think we had something to do with that. But anyway, and to put the cherry on top too, and I think maybe we've confirmed this with you already and told you, but we do have confirmation. Drew Bledsoe will be our guest featured speaker, and we couldn't get Tom Brady. I don't know.
From what I understood, he wanted to come, but we already had someone else in mind. But needless to say, we're not at a loss not having Brady there. Very excited to have Bledsoe there. He's still a big part of our community, and no, Frank, this will be wonderful.
Yeah, he can relate with the injury and the healthcare medtech thing as well. So it'll be a lot of fun. Anything that you want to share before we sign off? Tell people a little bit more about how to get a hold of you, or obviously come and hear you at the conference. You're going to be a real key part, and people will learn a lot more.
You'll see me all over LinkedIn, Frank. Tom Busby with Outcome Capital. For any middle market life sciences a group looking for a leading advisor, please contact us at Outcome. And we take real pride and pleasure in what we do and the advice and the strategies that we have to offer. So no, Frank, this will be wonderful, and looking forward to seeing you soon.
Yeah, it's been amazing, Tom, and thanks for carving out some time. Well, that wraps up this episode of Private Capital Insiders. A big thank you to Tom Busby for sharing this deep expertise and insights into life sciences, medtech, and digital health investment banking. If you enjoyed this conversation, be sure to subscribe, leave us comments and a review. You can also follow Private Capital Global for more updates and exclusive content. Be sure to check out our regional and national and international events that are happening in all major cities across the country, and especially in Boston this October with our Medtech Dealmaker conference. And remember, smart private capital moves start with insightful conversation. Thanks for listening, and we'll see you next time on Private Capital Insiders.